Bulls and bears are fighting over this range. Who is going to finally win? Are we finally going to see a breakout? Hello Adrian, and welcome back once again to another episode of the Dang Oracle. It is 7:30 p.m. UTC plus 8 is my time zone, and welcome everybody who is watching around the world. First of all, let me give you a warm welcome to the hardcore crew who is of course ready. And yeah, this is it. This is the week has just started. We are once again reloaded and recharged from the very slow pace but peaceful weekend, and now we are into fight mode once again. At least right now the bulls are apparently in fight mode right now, and they are pushing the price back up once again. And before we go into the technical analysis, let's say hi first to everybody. Hi Cedric, hi Lex, hi Gerson, hi Jeremy, hi Henry, hi Zaldi, hi Gita, hi Tina, hi Alvin, hi Fardeen. Welcome on this beautiful Monday. Hi Darren as well. So before, while everybody is trickling in, let's take a look first at the COVID numbers before we go into some more details, technical analysis. Right. So let's go to our map first to see what are the numbers. Ooh, the US, I can clearly see it now already. Close to 2.9 million cases. Brazil over 1.6 million cases, and India and Russia are now close to 700,000 cases. Hi Herns. Let's take a look on how it looks on the global map. Let's refresh that one. We are now at a total of 11.4 million, over 11.4 million cases. The chart does look like it wants to be going a little bit down. Hi Dimitri, welcome. Let's take a look on the top 6 countries. The US, of course, that doesn't look good. Brazil doesn't look good. India doesn't look good. Russia doesn't look good, and Peru and Chile doesn't look good as well. So like we've been talking about, we've been seeing the past couple of days, most of the action is from the top 6 countries that just keeps getting worse and worse, and other countries are starting to slow down a little bit already. Hi Nikolai, hi MJ, welcome once again. So let's go into the technical analysis. First of all, we had a amazing pretty crazy morning if you guys were awake. So let's go and update a little bit of what we were expecting. So this is the 4-hour chart. Before anything, so what I said was most likely we'll be retesting the 8.9k zone once again, and as you can see here, we did at that moment, but once again the price did not break or anything like that, even though we have now retested it 1, 2, and basically the third time yesterday, the 8.9k, and then I kind of expected the bullish divergence to be kicking in, and I thought, well, most likely we will be going back to around like 9.1k so ish or something like that. But the bulls have surprised me this morning, well today, not this morning, today, and we actually went up all the way back up and touched the EMA 200 once again. Well, what does that mean? First of all, as long as we don't break out of this territory, it is still a deadlock. So nobody, you can't really. The probabilities, we will go over that for a little bit, but right at this moment, so instead of a broadening wedge, we are actually now, well, it's pretty clear we are forming a symmetrical triangle instead. And as you can see right now, here we have our high here, we have our lower high here, and the question is, of course, is this going to be our lower high once again, or are we finally going to break up and out of this triangle, right? Or we get rejected once again downwards, and then I do think, well, I've been saying that for a while now as well, I do think if we do get rejected towards the downside, the 4th time we will most likely be breaking towards the downside. So yep, still all our eyes are up on are watching that moment in the short term. Like, well, it has to be, well, we are very near now to this apex, so it should be very near, and we already had 3 touches on the top side and 3 touches as well on the downside. So yeah, the 4th touch is usually the one that we have to be looking at. But before we go into more specifics and details, I just wanted to start with the weekly candle, of course, because that was what we were all looking for. And well, okay, so in terms of the weekly candle, we can say this, right? So we did close. You have to look at this one, not this one, because this one is the new weekly candle that is being formed. We did close below the 10 simple moving average, which is of course lower than before. We did make a doji candle. So yeah, this doji candle once again will give you everything that will what we want to be knowing. And for this coming week, we did close above all the other moving averages, right? So I do believe that this is quite important. So what is the top of this doji here, which is at 1 second, let me put on the magnet. It's 9,296.5. So let's put it at 9,300, right? So let's not make it more complicated than it is. Oh, why is it not editing? Once again, let me try this again. And it's not letting me edit. How come? Okay, maybe I'll just have to refresh and reload this once again. Okay, let's go back to our chart here. Poof. Our doji candle, poof, and then make our red line towards the top side once again. Up. And here, let's put our text here. So 9,300 on the top side. So if the candle close, if next week we are closing above 9.3K, that's a very good positive sign. Does that mean that we'll be going to the moon or anything like that? I mean, that's not what we're saying. But if we do close above the 9.3K, most likely we'll be heading towards, let's say, the previous body of this weekly candle. I would say like 9,750, 9.8K is definitely the range that we are looking for, right? But do we close below, which is at 8,906, so basically 8.9K. That is basically the zone that we are watching, right? So 8.9 and 9.3K, that's basically the deadlock that we are in right now. Yeah, those are the two key numbers basically that what we have to be looking at for this moment. The stocks are still the stocks are still curling towards the downside, but well, if the bulls are taking action, like I said, this is basically the spots where just before it goes back down, it can curl back up and we have a bullish momentum. Let me see where you can see some examples. Well, here you can see perfect examples here. So it goes back into our purple, not this one. It goes back into our purple territory, goes down a little bit, goes back up immediately. Go back into our purple territory, goes back and goes back up immediately. So that's basically the bullish momentum that we want to be seeing. So do we do that? You know, we go back down a little bit in the purple and then move back up? Yes or no? I mean, the time is basically pretty much now or in the next few days, right, for the bulls. But if that doesn't happen, of course the momentum is going to be keep going down towards the downside, and then yeah, we all know what is going to be happening. Now the most important thing is, of course, what I've told you yesterday. What we are looking at is on the RSI. Do we cross below the price, yes or no? And because of that close, we did not cross below the EMA price right now, as you can see here. So we actually bounced off the EMA right here, and that's, you know, that's quite bullish. You know, you cannot we cannot be blind to this. This is actually a very, you know, this is a very bullish sign, right? We just bouncing off this EMA is for me is big. It's quite big. But of course we want confirmation. And when do we have confirmation? When, of course, when we are breaking outside of this RSI at first. So what are we looking at? Well, this is what's the RSI here? 56. So what we want is maybe a little bit higher. So maybe put in 58 maybe. So what would be the price at 58? 58 would be, oh, that's quite high already, 9,676. So that's a little bit high as a confirmation, but well, yeah, let's play around with it. Let's put it exactly at 50. What was it? Sorry. 1 second. Let me move this one to the left hand side. so you can see what I'm looking at as well. 56. Yeah, let's say 656.5. That would be exactly at that spot. Let's see what the price would be. 9450. Hi, Michael. 9450. I don't think that's so. Yeah, doesn't give us that much information as I was hoping for. So yeah, but this is quite a bullish sign, right? So bouncing off on the EMA, but it needs to be confirmed by next week, or else yeah, we will have the same situation that we are going to be seeing on the weekly. But yeah, that's basically what the weekly close are. What I could tell you guys about the weekly close. But this morning, well, the traditional markets restarted, and yeah, as you know already, traditional markets did, well, Nasdaq made another higher high, went up like crazy once again. As you can see here, this is the daily. As you can see, pretty crazy stuff, and it doesn't seem like it's stopping right now, right? But what we also can see is once again the Stokes is hitting on a very high level once again. The sentiment flashing once again on the background to the green. So maybe we will get a small pullback, and that small pullback is going to be affecting Bitcoin, yeah, of course, right? But we can clearly see that yeah, the thing is you can't be very bearish right now on Bitcoin when the traditional markets are going up so crazy and so fast right now. But if they are going to take a small pullback towards the downside, obviously that is going to be pulling Bitcoin towards the downside as well. Very similar we can see on the S&P as well. But on the 4-hour, once again, we are reaching a very critical point here with this VWAP at 3,180, which is a very strong resistance as well. So we can clearly see also here RSI the Stokes did this. So once again, hitting a very strong resistance trend line once again. Do we get a larger pullback than just this one? That's something that we will see, right? But it kind of looks a little bit toppy. So who knows if but this looks very strong, of course. But once again, toppy. So small pullback, but a small pullback does affect Bitcoin quite a lot, right? So that's the biggest issue. But on the macro perspective, I don't think you can be bearish on everything, because if the daily looks like this, if the weekly looks like this, I mean, it's pretty crazy. Let's look at the monthly. This is the monthly right now. I mean, yeah. It will eventually, of course, like I said, it will eventually make that pullback, but it's not going to happen immediately. Even right now, if we are looking at the Stokes on the monthly, it just curled back up. And once again, this is an example of what I was telling you guys before. So basically, it drops down into the purple and then immediately crosses back up, and that would be a very bullish sign, right? So the time for Bitcoin to be breaking out is pretty much very soon. Like yeah, if they are going to be breaking out, I mean, pretty much the next couple of days, and with the momentum and everything, that's basically the chance that it has to be doing. But first, it needs to be breaking up above the 9.3k level. That has been now a big struggle, because every time it gets near there, it really gets rejected immediately towards the downside. Let's take a quick look on the daily chart, and as we can see right here, we bounced right off once again on the daily, the EMA 21 at 9,237.5. It got rejected immediately there. It's not technically not really rejected just yet, because the wick is there, but it still is holding very strong at like 9.2k right now, and above the EMA 55. So yeah, tomorrow, let's see, or later tonight, let's see if it's holding that position. And definitely, I'm still of course I'm waiting for the next 4-hour candle close, which and the 12-hour candle close, which could give us more indication of what is next. But right now, it is forming on the 4-hour some sort of like a dodgy candle, and usually after a big candle like this, and then we form a dodgy candle, that means a typical reversal pattern and a top pattern rather than a continuation, right? So what you actually want to be seeing is a better, like a better candle than this doji candle, or else, yeah, once again we will head towards the downside. And like I said, if the fourth time towards the downside, most likely it's going to be breaking towards the downside. Could go for another fifth time, of course. Who knows? Because right now we are going in this, we are ranging in this trend. But okay, in terms of like trading positions, well, it's quite straightforward, right? So what are we waiting for? Well, if we get rejected from that point towards the downside, of course, the same what we have been talking about. If we get rejected here, we'll most likely go down once again towards the 8.9k, but this time most likely it's going to be breaking. And then what I'm expecting is most likely towards around 8.7k first, and then most likely a little bit later on towards the 8.5k. Well, how can we see that? Well, if we are making some sort of like an expected move from this symmetrical triangle, we can clearly see if we do break towards the upside. Let's take a look. If we do break towards the upside, where are we going to be getting? If we do break towards the upside, the measured move is around 9.6k. So there's no point in holding into my shorts anymore if most likely we are going towards the 9.6k. Does that resolve the whole structure though? Does that resolve the whole structure? Not really. So we can wick up all the way here, and then most likely we'll have a retracement, and then if we then see a bounce from this area towards the upside, then most likely it will be resolved. And then what I'm going to be doing is most likely wait for a retracement from this 9.6 towards the down, and then most likely long the support area here, because and then we basically should be seeing a breakout of this whole downward pattern rather than keep going towards the downside. On the other hand, well, if we are looking at the measured move of the downside, of course, then we shall move this one towards the downside. Let's say we break down here, after here, then we can clearly see that we will be getting, well, there is a nice VWAP ratio here, VWAP support here at 8.7. So it's like between 8.6 and 8.7, something around there, maybe a wick down all the way towards 8.6, right? So that's what the measured moves are saying. And as we can see right now, we are, well, pretty much near the apex right now. And well, although everybody is quite bullish, I guess, right now with the pattern and everything, we do have to be saying that just looking pure at the volume profile, as you can see here, all the red candles right now here, all the red candles are bigger and stronger than the green candles. That usually means distribution rather than accumulation, right? So once again, the volume right now is not in the favor of the bulls. What is in the favor of the bulls is, of course, that the traditional markets are doing so well. So they are actually pushing up everything, right? Not only the stocks, the everything, right? So the whole market is being held up by the traditional markets right now, who is on a complete tear, on a complete bull run right now. For people who are trading traditional markets, it's been it has been crazy times. Like my Tesla shares have been going nuts. My Microsoft shares have been going nuts. So yeah, although it has been boring to be trading Bitcoin, to be honest, and like I said, I've been holding on to my short position for like what is it now, 10 days or something like that. So yeah, it's still not very fun. Just looking at the Nasdaq divided by Bitcoin chart, we can see that there is some money that went into the cryptocurrency market from the traditional markets, and that's also the reason why, of course, Bitcoin did get a nice pump towards the upside. The question is, do we keep going up, or do we keep going down? If we get down more, then most likely we will have enough funds to be breaking towards the upside and on the Bitcoin price rather than the downside. But like I said, nothing is really resolved just yet, and to be honest, just just a quick look at the RSI on the daily, we can clearly see this. Well, I will be removing this line now because it's not that important anymore. Basically, what we want to be seeing is the RSI to be breaking out of this falling channel towards the upside, right? But if we get there and we get rejected once again, then we go for a leg lower, and then most likely that will be the end. I mean, that will be the 8.6k ish area towards the downside, or maybe even lower, depending on how fast we drop, right? So all eyes on this. If we do break above this area here, I've made a quick look on the daily, and 51.5 would kind of, you know, resolve that area. And if we take a look on the RSI charts, no, that's not the RSI. 51 on the RSI on the daily is exactly 9,293. So basically 9.3k, right? So 9.3k is quite an interesting number and a very confluent number, right? So that's basically the target and the number that we need to be breaking. And if we do break this channel, most likely we'll be heading towards a spike up towards like 9.6k, then a small retracement, hopefully hold the 200 simple moving average, which is currently at 9,385. So some spike above there, and then go back down there, and then break up towards the higher levels. That's basically, that would be the bullish, the most bullish scenario that we would be looking at. But until anything gets confirmed, we are waiting, patiently waiting to be seeing what is going to be happening. So since we are waiting for what is well, in the next 7 minutes, maybe we will see what the next candle is going to be forming. What I wanted to show you guys is one of the theories that I actually have been learning. One of my first theories, which is the Ichimoku cloud, right? So I wanted to go over some theories today, well, technical analysis theory about the Ichimoku cloud. So what is the Ichimoku cloud? It's actually a very interesting indicator, because it basically, in one glance, once you have used to be using it, in one glance you can see if the market is bullish or bearish, if the trend is okay, if the trend is good and the trend is bad or something like that. So why is it called the Ichimoku cloud? Of course, because we have these red and green clouds that we are seeing. So first, let's not look at anything else. Just let's look at the clouds itself. And whenever we are below a red cloud, obviously that is bearish. Whenever we are above a green cloud, of course, that is bullish. So that kind of shows you the momentum of the price. And as you can see here, right now we are above the green. We were above the green cloud for a very, very long time, as you can see. So price went up and it was pretty bullish, right? But now, as you can see, since the past what is it, since 24th of June, so let's say a week and a half or something like that, we entered back into the green cloud, which means indecision, or basically the momentum is wavering, right? So what is very bad is when we would be breaking down and below the cloud, of course, obviously. And that is when you get this formation here, which is called what we call a chemo twist, where we have a formation change from a green cloud into a red cloud, meaning the momentum is wavering, and there's less and less buying pressure or bullish pressure. Another way what you can do with these clouds is use them as support and resistance, right? So as you can see here, price went up here above the cloud, and then went back down, pushed onto the cloud, and went back up once again. So that was a cloud that was used as a support cloud. Another example here, we can clearly see here, price went up towards the cloud here, but it was a red cloud, so it was resistance, and then basically it got rejected, and then price went down. Then it tried again, tried to break that cloud once again, as you can see, resistance, and then failed and went back down once again. So the clouds you can use as support or resistance. That's one thing. And immediately with the color, we can clearly see, are we in a good bullish momentum, or are we in a medium momentum, or are we in a bearish momentum? So those are the clouds. Then you use, there's two lines. Well, I'll start first with the two lines. One is the blue line, it's called the Tenkan line, and one is the red line, it is the Kijun line, right? Yeah, it's a Japanese theory, so they have Japanese names. But you can just, if you, you can just use the first letter, the K or the T line, right? So what are we looking for are crosses, right? Crosses of the Tenkan and the Kijun, or the blue and the red line. Whenever the blue line is crossing above the red line, that's a bullish signal, right? But you use it in combination of the cloud. So as you can see here, for example, price did cross, the blue crossed over the red line, but we are still, the price is still below a red cloud. So that is not a signal. The signal is only when the price is above the cloud. So we would be waiting until the price is going up. And here, this would be a good entry position because we are above the red cloud and the blue line is above the red line. And as you can see, this would be our trade. It would be going up until this spot here, because and then we would have a bearish cross. As you can see here, the blue line crossed below the red line, meaning we would be exiting our long signal. Would we be going into a short from this spot? No, we wouldn't, because why? We are still above a green cloud. When would we be going into a position? Well, right here, right? Because here the red line crossed below the blue line, plus the price was below the green green cloud. So that would be a perfect spot to be entering a short. And where would we be stopping our short? Well, we would be exiting our short most likely around here. So we still have a nice profit from that area as well. So yeah, whenever we have a cross that is inside the cloud, it means very indecision. So you should be basically thinking as the following: when the cross happens below the cloud, usually it is a very weak movement. When it's inside the cloud, it is a medium strength movement, and when it's above a cloud, it is a strong movement, right? So those are the fundamentals basically from the Ichimoku. So why is this interesting? Well, because once again, we can clearly see what the momentum is right now, right? So if we are just in one glance, because that's basically what Ichimoku means, one glance, that you can basically see everything what you want to know. Right now, as you can see, the blue line or the Tenkan line is below the red line, which means the momentum is waning towards the downside. And we had our bearish cross here. As you can see, the blue line went below the red line. But the problem is we are still above the green cloud, right? So we cannot enter a position. But what we can clearly see is, as long as this blue line is below the red line, it means the momentum is definitely towards the downside rather than the upside. But the thing is, we are still in the middle of a cloud, meaning we still have support on the downside and we also have support on the upside. So that's the reason why we have to wait until we are exiting the cloud before we will see some resolution. And that's also the reason why price has been very stagnant and ranging in between two prices, because we are in the middle of a cloud. We are in the cloud, so things are not moving very quickly, not on the upside or on the downside. And as you can see as well, like I said, we can use the cloud here as a resistance and a support. So right now, as you can see here, the resistance is pretty much at around $9,440 or something like that, which is of course our green box here. Our green box here on the top end here. This is the major resistance that we are having. And on the bottom side, we can clearly see this is here, which is at, it's the price is now around here, right? So we should be taking a look here. So the bottom is around 8.7K, which is, well, the target that we are looking at if if things break towards the downside rather than the upside, right? So yeah, just in one glance, as you can see, we can see, okay, are we in a bullish trend? Are we in a medium bullish trend? Is the momentum towards the upside, or is the momentum in the downside? And that's one of the reasons why the Ichimoku cloud theory or technical analysis is quite convenient to be using, and you can use it obviously for everything. And that's why I started using the Ichimoku cloud, because before, and 4 or 5 years ago, I was trading a lot of altcoins, and well, we had hundreds and hundreds of altcoins, and I needed a theory where I can see the situation of an altcoin in one glance, basically, and where I'm saying, okay, well, this is not interesting, so I move on to the next altcoin, I move on to the next altcoin, I move on to the next altcoin, because this is not interesting, blah blah blah, and so on. So that's why I started learning Ichimoku cloud theory, because it was so convenient to be watching that on altcoins, because you had so many, and you only needed one glance or 1 minute to be knowing, okay, well, this is interesting or this is not interesting at all. So the red clouds, that's a chemo twist. Whenever we have a printing of the red cloud here in the next upcoming, it is bearish. It means that the momentum is basically wavering of the green cloud. That is correct. So okay, then, but this is actually not complete yet. We have another line, which is called the Senku line. Sorry, the Chiku span line. The Chiku span line. The Chiku span line. Wait, let me remove this on. The Chiku span line is basically a confirmation line. It's a lagging indicator. A lot of people don't really use that one, but to be completely correct, you should actually be using it to be completely correct. I'll show you how you actually should be using it. So whenever you have a cross, let's give an example here. This is the cross that you can see here, and then basically you have to be looking at the Chiku line. Is the price, because this one is a longing position, is the price above the Chiku span, yes or no? And then this gives you a confirmation to enter your position. So as you can see, the price was above the Chiku, so you could be entering your long. So it's like a confirmation, like a safety indicator on top of the whole theory. Let me give you another example, maybe from a bearish cross. Here we can see, here we have a bearish cross here towards the downside, and the price was here, and you basically check if the price is below the Chiku at that point in time, and that, as you can see right now, the price was below the Chiku, so that was confirmed, so you can enter your short. But that's basically a confirmation or a lagging indicator, a lagging span indicator. So a lot of people don't really use that one, but I'm just giving you it for a full confirmation, right? For full confirmation. Anyways, as you can see right now, one of the reasons why I'm still not 100% convinced that we are going to be breaking towards the upside is because, well, we are still trending inside this cloud, as you can see right here, and also, of course, the blue line is still below the red line, or the Tenkan is below the Senku, the Kijuns, the Kijun line. So I'm still waiting for confirmation, because it can basically break very down very quickly out of this cloud, and then we have potential confirmation of a short position, right? Because then we have a blue line that is crossing the red line, and we have a price that is below the cloud. And if we are looking at the Senku line, we can clearly see that it would be below that as well. Okay, so yeah, I hope that was educational, because yeah, that's one of the first theories that I've learned. So yeah, like I said, it's quite cool. You can use it on every time frame, the Nikolai. That's the cool thing about the Ichimoku as well. So if let's go for the 4 hour cloud, 4 hour we can see here. So on the 4 hour, we can immediately see that even on the 4 hour, we have resistance, but as you can see, it's trying to break out of this red cloud, and you can clearly see as well that the blue line is still below the red line, but it's trying to be crossing over, as you can see. So if we would be able to be breaking out of this cloud, like I said, the cloud can also be used as a nice indicator of a resistance, as you can see. Every time it touches the cloud, got rejected, went down, but then the support line, as you can see, the cloud is a support, held the price, then went back up, and as you can see, currently still rejected out of the 4 hour as well, of that price, right? So, but of course, the higher the time frame, the better the results will be, because in one day you have, of course, 6 times the 4 hour candle close, right? So the probabilities that you'll get better results is obviously on a higher time frame is more important than on a lower time frame, but you can use it on every time frame that you want. So yeah, there's that. Maybe if you can see a nice spot, yeah, here, this is actually a really nice spot. So we had a close here, the blue line below the red line, closed below the cloud, and as you can see, went down substantially towards the downside, and then here it went up above the it crossed over and was above the cloud here, as you can see, and then we had a nice pump towards the upside, as you can see. Nice pump towards the upside. So yeah, works pretty well in shorter time frames as well. For scalping, it's actually a really good general indicator, to be honest. So it's yeah, just have to be. I know a lot of professional traders who are relying on Ichimoku trading alone. So they only use Ichimoku as their main that's the main tool to be trading, and I kind of understand why, because it is I mean, it shows you a nice indication, right? Anyways, let's move on into expected move chart. Let's see, because now the candle has closed. Let me take a look first what we have. Well, we have touched once again at the at the EMA 200 right now. The question is, yeah, do we break it, or do we hesitate and waver, right? So why is it making this weird stuff? Okay, wait. Okay, let me remove this. Boom, boom, boom. Yeah. Do we get rejection once again, or do we get pushed towards the upside, right? Let's take a look on the expected move chart. Expected move chart says first standard deviation to the top side is 9,300, 9,295, as you can see. God damn it, we won't get resolution most likely again. And towards the downside, it's 9,150. But as you can see right now, probabilities is more towards the downside than the upside as well. So that's what the expected move chart says. Who knows, right? We just have to wait. And once again, the Stokes are actually on the 12 hour are actually curling towards the upside. Let's see. Let's take a look on the RSI. RSI is definitely above. Let's take a look on the daily. It's trying to curl up towards, but it looks very weak once again. It looks very, very weak. It is above, but yeah, it will be crossing down, of course, below 9.1. Let's take a look on the shorter time frames. Yeah, we are here on the 4 hour. Once again, do we break above this or not? It's just basically that, right? The Stokes are the momentum, but we have been rejected here once, twice, three times already there. Yeah, the Stokes are going to be also indicating us if we are gonna go up, yes or no. I'm sorry, MA63. I'm still not convinced, and I'm not going to be convinced until I see confirmation, right? But that's how I trade. Like I don't have I don't trade on my emotions, or I don't trade on my opinion. I just trade on basically on where I see the highest probabilities are, and yeah, although it looks it looks more bullish now than whatever, but on the technical aspect, we have been creating lower lows, we have been creating higher lows, and that's not a bullish sign. But of course, we can always get reversals. And let me remove this one for now so we don't see it. And the RSI is currently showing this right now on the 4-hour, and that's actually not a very positive sign as well, because this is like a double top on the RSI as well, and it's curling towards the downside. But I mean, no judgment. It can do this. Like I said, it can do this. But whenever we have some sort of like a double top, it usually goes towards the downside. We can see it here, and then it went to the downside, as you can see. If we can see another example before where we can see some sort of like a double top, yeah, once here, once again here, double top here, and then we get a correction towards the downside on the RSI. Yeah, so this is not a very healthy breakout type of structure towards the upside as well, right? But you know, like I said, I don't really trade my opinion. If it does break, I'll just wait for my spot, and then I'll be longing. And if not, I'll just be holding onto my short until it breaks towards the downside, right? That's basically how I am. But other than that, yeah, let's see what really happens during maybe tonight, maybe yeah, because the volume is very mature right now, right? We have been showing this for a really long time already. So if we are taking a look, it's really close to the apex now. We will have a move very soon, very soon. So yeah, yeah, it can't be taking so long anymore, right? Let me take a look on some other momentum indicators, if you can see here. Okay, so the Hurst oscillator did cross over the yellow line right now, but it is still, like as you can see, it's still in the red zone, which is the bearish territory, so it can get rejected towards the downside. The Hurst cycle itself is, yeah, it's still, yeah, it's flattening, but still not curling very positive, as you can see. So it can get rejected. It can reject. I'm not saying that it will get rejected, but it can get rejected. Let's put it like that. Let's take a look here. MACD. So yesterday the MACD was around, I think, 90, and it did curl back up now, as you can see. MACD is only minus 77, but it's still not positive, right? But there is a way. There's just a way. Right now the Stokes are up, crossing above the EMA as well. So yeah. Yes, Nikolai, that one is very slow, right? So that one is very slow. So Wyckoff is of course still on track, because if we do break towards the downside, then Wyckoff is definitely still on track. But yeah, if we break towards the upside, then Wyckoff will be a different pattern. It will be a creek over the. I'll show it maybe tomorrow if it does happen. If we do break towards the upside, it's a different. That's a problem also with Wyckoff. We have several distribution and accumulation patterns, and sometimes, yeah, it just looks so very similar. So it could be both. But like I said, for me it still looks more distribution than accumulation. But like I said, the Wyckoff will be invalidated if we do break above if we break above the LPSI, right? So if we break above 9.7K or this area here, then it's going to be invalidated. Yeah. But yeah, we will know a lot more very soon. To be honest, I don't think it's going to be that long anymore, right? We are now here on this spot here, so. Let's see if we get rejected or not. But the hash ribbon doesn't go off. Oh yeah, let's take a look at the hash ribbon. We've been haven't looked at. No, it's still no buy signal. It's still no buy signal. God damn it! Where is my buy signal on the hash ribbons? So yeah, no buy signal on the hash ribbons as well. We've been waiting for that for a really long time as well, right? So. Maybe on the longer term time frames, let's take a look if we can see something new on the 3-day. Well, it's not going to be closing very soon. The 2-day. Let's see, the 2-day. Boom. today is going to be closing tomorrow as well. We are impending a bearish cross between the 10 simple moving average and the 21 moving average on the 2-day, but yeah, that doesn't give me us that much information to go on to. Yeah, I think it will all depends on this basically on the traditional markets. If the traditional markets keep on take another leg up towards the upside, I think Bitcoin is going to take a leg up towards the upside as well, to be honest, and then we'll be breaking out of this concoction and out of this zone. But let's see. My my bias is still the same bias that I have been for the past, I don't know, 2 weeks or something like that. So let's see what happens. But if I am wrong, I'm like I said, I don't really care to be right or wrong. The only thing I care about is by making money and making sure that I get the right position whenever something happens. So if you're going if the prices, if the charts are telling me that we are breaking out towards the upside, then I'll be long it. I have absolutely no problem with that at all. Even with the 10 days that I am stuck in my position right now, I'm still okay with that as well. That's what a trader is all about. It's all about being very, very patient. But to be honest, this is what the problem is, right? Every time we get this sort of like this huge pump, we get to this spot and then it just stagnates. It just stops, right? And yeah, that's not a sign of something very, very bullish. But yeah, crazier things have happened before. So let's see. I think maybe tomorrow, well, probably tomorrow we will have a lot more information than today. But yeah, weekly candle let's wrap it up. Weekly candle close was kind of okay, kind of positive, more positive than negative, I would say. More positive than negative because the RSI did bounce off the EMA. That is something that is what I'm thinking. Whales do always the opposite of what the chart tells us. That's not really true. That's definitely not true. There's a lot of people that I mean, whales are trading on the charts as well, right? So that's definitely not correct. It just, maybe it feels like that because you're always you're always not making money, or you're always wrong. that's more a problem for yourself rather than the whales problem. Do the whales manipulate, or do the whales have an edge or push the price up a little bit more or down? Definitely yes. They do play their games. That's for sure. But yeah, just saying that they are doing exactly the difference. No, that's kind of bullshit. Or else I wouldn't be able to be profitable for so many years as a trader. So yeah. Anyways, of course. But like I said, we are just waiting for a confirmation, right? So like I said, if the price does break up towards the upside, then I'll be stopped out, and I'll just change and switch my position into a long position, or find a long position whenever things are looking bullish. I don't know why people are so they're always so mesmerized or so obsessed about being right? Like you cannot be right all the time. You can't. It's impossible. Even the whales are not right all the time, or else you wouldn't have whales getting killed. Right? They would just keep making money and taking all your money. Most of them do though, but that's something else. That's something different. Anyways, so yeah, waiting for a breakout. I do believe now that we are very, 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 very near. Maybe we'll see what happens in like more in like an hour. So yeah. My opinion is I'm not trading my opinion, right? So if you would be asking my opinion, I would be saying like most likely we're going to be going up. That's my opinion. But I'm trading technical analysis, and technical analysis right now is still telling me that the momentum is not right there to be breaking towards the upside, and the probabilities are still higher towards the downside. Is it possible that we don't break towards the downside? Of course, that's why it's called probabilities. But since the probabilities are higher towards the downside, I will put my bet towards the downside, because uh, if I do it in the long run, if I do it for example, let's say you are 7 times right and 3 times wrong. That's the probability, right? You can be right, you can be wrong. But because of your risk management, if you are right and you place that bet 10 times, you'll be right 7 times, meaning in the long run, you'll be making profits. And that's what playing the probabilities is all about, rather than playing your opinion, right? So, like I explained before, uh, if during the whole week and I have 7 positions and every position is $100 and I was right 4 times and I was wrong 3 times, then at the end of the week I'm still up $100. That's basically what the trader is all about. You should be thinking about probabilities and think not, thinking about like, wow, oh damn, I was wrong. Of course, it sucks to be wrong, right? Of course, it sucks to be wrong, but yeah, like I said, you have to trust and trade your technical analysis rather than your opinion, and that's the problem with most people, and that's the reason why in the long run you can get lucky trading a couple of times and be right, but if you are a solid trader, you'll understand that P&L is way more important than anything else, rather than being right or being wrong. And oh yeah, maybe I can answer that question, because that's a lot of people question that a lot of people asking me. So when would I consider going full time as a trader? Well, I would say if you are positive, if your P&L is positive for 6 months, then I would definitely recommend you trying to become a full-time trader. Until that happens, I would stick to part-time and just trying to learn and improve on your skills. But if your P&L is positive after 6 months and you keep making good progress, keep learning stuff, that's when you should be thinking about becoming a full-time trader, and you most likely will be successful as a full-time trader. But if your P&L is not positive in 6 months, over 6 months, day trading, then yeah, I would just stick to being part-time and trying to improve on your skills first before doing anything full-time. That's my advice for people, because I get that all the time as well. People asking me like, hey, when should I consider going full-time as a trader? I feel pretty good. I had a good result for the past 2 weeks. That's not what I'm hearing, but no, it doesn't work like that. 6 months is most likely the area or the period that you should be looking at. Christopher, I think well, people who know, who understand, who know already. I'm not trading the amounts that I've been trading before and the amounts that I've been trading now. I mean, it's nowhere what you guys are trading or anything like that. So it's a substantial amount. But I don't want to go into that kind of talk or dynamics. So yeah, I just want to help out and share the knowledge and give a little bit of positivity during all this time of lockdown and this time of need for people, rather than being like I said, nowadays people are way too entitled, way too selfish, and also way too lazy, to be honest. Like they all expect like yeah, I'll become a great trader by even the attention to just watch a stream for 1 hour. That's too much already. Like I get messages from people, hey, can you just slim it down and make videos of like 5 minutes or something like that, or hey, can you just tell me like, is it gonna go plus $50 in like a 5-minute video or something like that? I mean, that's the problem with people nowadays. They don't even have the attention span to be actually learning something or actually putting effort into something. Everything has to be immediate. It has to be now. But it doesn't work like that. It takes a lot of work, hard work, and dedication, rather than to become good or better at something. And that's something that I want to be showing by doing these videos on a daily basis as well, right? Because if you've been watching me, I've been here every fucking single day. You see me here. I'm grinding it out, and I'm showing you guys, and I'm doing content. I'm trading. I'm doing all of this every single fucking day, right? But for a lot of people, it's just they don't put in the effort. They just don't put in the effort. They just want now results, and then this and that, and also they see like he was wrong in that aspect, because the price went up, because he keeps saying that the price is going down, but the price went up. So yeah, that's bullshit. And then it's just that mindset. And if you have that mindset from the start, then you will never be successful as a trader. But that's okay as well. Nobody is supposed to be become a full-time trader or anything like that. If you get something out of it, if you just the work ethics out of it, that's positive as well, right? I have a very good work ethic. That's why I've reached the levels that I've reached in. Without work ethic, you would not be able to do anything at all. So yeah, that's the last rant before I end the show for today. I hope that nobody just turned off all the all the streams and are still going to watch me tomorrow. even though if the price is gonna go to the moon, and the people will be angry and upset at me, but yeah. Anyways, grind it out, guys. Grind it out, and try to, if you are aspiring to become a better trader, then you have to work on it and grind it out. If not, then do something else. Don't waste your time doing something that you don't feel happy with, or that you don't want to put all your effort into it. If you don't want to go 100% in something, just don't waste your time into it. Just do something else. That's what I also tell everybody, because like I said, there was one time there was somebody who came here, and he was like immediately saying, oh, this guy is just showing some nonsense indicators that are lagging or something like that. Cool. Then I'm just saying, go and do something else that is more useful in your life than waste your time watching the dang Oracle rant on some Facebook or some YouTube, right? So anyways, that's it. I hope to still see some of you guys tomorrow. All right. Wish you a very happy Monday. Let's see what's going to happen in the next 4 to 8 hours. Tomorrow morning, we might see some sort of conclusion, and then we can move on and find some maybe some long positions, or maybe some short, or hold on to our short position. That's basically what we are looking at this time. All right. So 7:30 p.m. UTC +8. Please like, share, comment, and do whatever you want with